Welcome to Info News. My name is Farzana binti Muhammad, your new anchor for today's main channel. So, for today's news, we will talk about the Real Estate Investment Trust, REITs. Sure, here is definition of I-REITs with a long explanation. I-REIT stands for Islamic Real Estate Investment Trust. This means that they must avoid investing in activities that are considered to be haram, such as gambling, interest-bearing loan, and the sale of alcohol. I-REITs are similar to conventional REITs in many ways. They are both investment vehicles that allow investors to own shares in a pool of real estate assets. However, there are some key differences between I-REITs and conventional REITs. Investment restriction. I-REITs are subject to a number of investment restrictions that are designed to ensure that they comply with Sharia law. For example, I-REITs cannot invest in properties that are used for gambling or sale of alcohol. Distribution requirement. I-REITs are required to distribute at least 90% of their taxable income to shareholders in the form of dividend. This is higher than the distribution requirement for conventional REITs, which is 19%. Tax treatment. The tax treatments of I-REITs can vary depending on the jurisdiction in which they are listed. In some jurisdictions, I-REITs may be eligible for certain tax breaks that are not available for conventional REITs. It's the little bits about REITs. For more details, we will pass to anchor Nur Salihah from Channel 1.
Thank you, Farzana from the main channel. And now, welcome to Channel 1 with me as your anchor, Salihah. In the realm of real estate investment, there exists three primary categories of REITs, namely equity REITs, mortgage REITs, and hybrid REITs. Firstly, let's discuss equity REITs, which happen to be the most prevalent type of REITs. They are the owners and operators of income-generating real estate properties, which encompasses office buildings, shopping malls, hotels, and apartments. It generates income through rental payment and, in certain instances, through property sales. Additionally, there are mortgage real estate investment trusts and REITs that specialize in investing in mortgage or mortgage-backed securities. Typically, they provide loans to real estate developers or owners, or they acquire mortgage-backed securities from other investors. Indeed, REITs derive their income from the interest payments received on the loans or securities they hold. Finally, there are hybrid REITs, which merge the investment strategies of equity REITs and mortgage REITs. They have the options to own real estate, invest in mortgage, or engage in both activities. Hybrid REITs are a relatively recent addition to the REIT landscape, and they are not as prevalent as equity REITs or MREITs. Apart from the three primary types of REITs mentioned, there are also various specialized REITs available. One example is healthcare REITs, which specifically focus on investing in real estate associated with the healthcare industries. This includes properties like hospitals, nursing homes, and medical office buildings. In addition, there are infrastructure REITs that focus on investing in real estate assets that are crucial for the smooth operation of the economy. These assets include highways, bridges, and airports. Lastly, data center REITs are investments that involve real estate properties specifically designed to accommodate data centers. The appropriate type of real estate investment trust REIT for you will vary based on your specific investment objective and your willingness to take on risks. REITs are commonly regarded as having lower levels of risk compared to mortgage REITs, although with a trade-off of potentially lower returns. Hybrid REITs, in the meantime, have the potential to provide a favorable balance between risk and returns. So, that concludes the information regarding the different type of REITs. For qualification of REITs, we will move to the channel 2.
Hi, welcome to channel 2. I'm Najatu, your anchor for today, and I will give you an info about qualification. Here is a more detailed explanation of the qualification requirements for I-REITs. Investment. The assets of an I-REIT must be Sharia compliant. This means that the assets cannot involve any interest-bearing transaction or activities that are considered to be haram. For example, an I-REIT cannot invest in properties that are financed with debt or in properties that are leased to businesses that are engaged in interest-bearing activities. Dividends. The dividends paid out by an I-REIT must be derived from the income generated by the underlying assets. They cannot be based on interest payments or other form of debt. For example, an I-REIT cannot pay out dividends that are based on a percentage of the assets under management, as this would be considered to be a form of riba. Management fees. The management fees charged by an I-REIT must be Sharia compliant. This means that cannot be based on the percentage of the assets under management, as this would be considered to be a form of riba. Instead, the management fees must be based on a fixed fee or a fee that is calculated based on the performance of the I-REIT. Structure. An I-REIT must be structured in a way that is consistent with Sharia principles. This means the company must be owned by a majority of Muslim investors, and the assets must be managed by accordance with Sharia law. The I-REIT must be also have a Sharia committee that is responsible for ensuring that the I-REIT complies with Sharia principles. In addition to these requirements, I-REITs may also be subject to additional requirements imposed by jurisdiction in which they are incorporated. For example, in Malaysia, I-REIT must be approved by a Securities Commission Malaysia, SC. The qualification requirements for I-REITs can vary from jurisdiction to jurisdiction. It is important to check with the relevant authorities in the jurisdiction in which you are investing to ensure the I-REIT you are considering meets all the required qualification. And that's all about this qualification. Next, we will go to channel 3.
Thank you, Najatu, from channel 2. I am Hanani from channel 3, and now I am going to explain to all the newest viewers the steps to investing in I-REITs. For your information, there are 4 simple steps to investing in I-REITs. First of all, you browse the Bursa Malaysia website and pick a suitable brokerage firm. Before choosing the brokerage firm, you must take note of the broker's commission fees, ease of transaction, whether it is Sharia compliant, and how user-friendly the preferred online trading platform is. After selecting a broker, you need to set up an appointment with the broker to open these accounts. Typically, you will be asked to provide documents such as copies of your identification and bank account statement. The broker will also give you a tutorial on how to use the online trading platform. It will take a few days to open an account, but once your account is activated, you can proceed to put funds into the online trading platform by adding funds based on your financial ability. With sufficient funds in your trading account, you may now start buying and selling shares on Bursa Malaysia using the online trading platform. Okay, now I will inform you about the example of I-REITs in Malaysia. According to Bursa Malaysia, out of 80 REITs in Malaysia, 4 are Islamic or Sharia compliant REITs, which are Al-Aqab Healthcare REITs, Axis REIT, Al-Hatarah Postal REIT, and KLCC REIT. The difference between I-REITs and conventional REITs is the source of income. I-REITs derive their income from business activities that are Sharia compliant, which excludes business activities deemed unethical, such as dealing with alcohol, tobacco, gambling, and non-halal foods products. As for I-REITs that do business in a mixture of Sharia compliant and non-Sharia compliant activities, the returns from non-Sharia compliant activities must not exceed 20% of their overall income. I think that's all from me, and now we will move back to the main channel.
Thank you for all the anchor from channel 1, 2, and 3. Now I will continue with the last point of the news, which is advantage and disadvantage of real estate investment. Here are some of the advantage and disadvantage of investment in REITs. The first advantage REITs are required to pay out is the income at least 90% of their taxable income to shareholders in the form of dividends. This means the REITs can provide a steady stream of income for investors. Second, diversification. REITs can provide diversification to an investor's portfolio. Real estate is a different asset class than stock or bond, so it can help to reduce risk. Third, liquidity. REITs are traded on major stock exchanges, so they are highly liquid. This means that investors can easily buy and sell REIT shares. Next, tax benefit. REITs offer certain tax benefit to investors. For example, dividends paid by REITs are not subject to capital gain tax. Tax professional management. REITs are typically managed by experienced professionals who have a deep understanding of the real estate market. This can give investors peace of mind knowing that their investment is well managed. So we proceed to the disadvantage. Firstly is real estate risk. The value of real estate can go up and down, so REITs can be volatile investment. Second, interest rate risk. REITs that invest in mortgage are exposed to interest rate risk. When interest rate rise, the value of mortgage-backed securities can go down. Third, management risk. The performance of REITs can depend on the quality of its management team. If the management team is not effective, the REIT's performance can suffer. Then, limited control. When you invest in REITs, you are essentially investment in company that own real estate. This means that you have limited control over the properties that the REITs own and the way that the REITs is managed. Last but not least, high fees. Some REITs charge high fees, which can eat into your returns. Overall, REITs can be a good investment for investors who are looking for income and diversification. However, it is important to understand the risks involved before investing in REITs. That's all from me. Thank you.